Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Good morning, everyone. I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial life. And I'm joined today, I have a very special guest today in the studio. I'm joined by my co-host and fellow financial professional, Matt Boudreau. Matt, welcome to the program.
Good morning. Thanks for having me. Good to be with you. I know I'm no Jesse Hamilton, but I'm going to try my best this morning.
Yeah, we can't change those bumper music like that. So we wanted to make sure that everyone knew that they were listening to Matt Boudreau. Jesse's taking the week off. One of the cool things about our office is we've got a number of talented musicians in our practice. Matt being one of those, and Jesse the other. I just only can sing in the shower and hope that no one hears. Hey, so this week our verse of the week is Luke 16:10. Whoever can be trusted with very little can also be trusted with much. And whoever is dishonest with very little will also be dishonest with much. But, folks, you can join us and call us right here in the studio at 452-1120. That's 512-452-1120. And we want to take your questions. It can be about anything financial, insurance. We're going to talk a lot about taxes today, but insurance, questions about your portfolio. But Matt, tell them what we have in store for them today.
Yeah, so on today's program, we're going to discuss taxes. We're going to discuss what the Bible says that we're responsible for. We'll also talk about what happened in the financial markets this week, including what every investor needs to consider while they try to protect their wealth. We're going to try to answer questions from my mailbag, but we do want to talk with you. So please feel free to give us a call. The number here is 512-452-1120.
It was a kind of a crazy week again, Matt, in the markets and stuff. And, we're going to unwrap that a little bit more in the first segment. But, did you have a good week necessarily?
Yeah, for the most part, yeah.
Good.
Long week, but good.
All right. Well, Matt, there's some other ways they can join us besides calling in. How can they contact us on our show?
Yeah, so we're on Facebook. We're live. We've got several social media channels. All you have to do is visit our website, spendlifewell.com/radio, and that'll send you to the proper avenues. Follow us on Facebook. Interact with us there. But on our website, you can also find previous show broadcasts. You can sign up for any of the upcoming educational webinars, which we like to do from time to time. So,
all right. So you can also send us your questions live today if you want to send us an email if you prefer that. You don't like the chat on Facebook. Well, you can send that to radio@spendlifewell.com. That's radio@spendlifewell.com. Let's go ahead and jump into our first segment, Matt.
Yeah. So today we're going to talk about several things, and hopefully it'll just kind of generate conversation. And like I said, we want you to join in. But today we're going to talk about that there's a direct correlation between income and income taxes that are due. Obviously, tax reduction, it's a legitimate goal. You're not doing anything wrong by trying to maximize what's offered there. But tax reduction should never be, the quote, tail that wags the dog. Mm-hmm. Something to explore, something to make sure that those avenues are done properly. But know that it's always an option without feeling like you're doing the wrong thing. The fact that inability to pay taxes is possibly symptomatic of poor planning. How can you think ahead to try and take advantage of avoiding
That's so true, Matt. I mean, so many people that it's amazing to see the number of people that are surprised, especially if you run a business, that are surprised that they have a large tax bill, and that's just because of poor planning. And and really may be symptomatic of poor stewardship. But go
Yeah.
ahead.
Well, it's just a reminder of being able to think forward, plan through those different things. Obviously, things change from year to year, but if you're aware of how that affects you at the end of the tax year, there's ways to plan around that. We're going to talk about tax reduction, debt reduction, how they can be in direct conflict with each other. We talked about planning. Those are definitely things to consider as you're working through your year, as you're working through your cash flow. But in other words, we want to discuss, decreasing taxes. Let's decrease your income, which decreases your ability to pay off debt. Those are all things that kind of swirl around together, and staying organized and planning through those things are going to keep you on top of those processes. Ultimately, all income from whatever source is taxed. You need to be aware of how they're taxed, where the income's coming from, and just kind of be able to frame it properly so that you understand what tax implications are coming. Tax avoidance, tax evasion. We talk about decreasing the taxable amount and taking advantage of credits and things, but tax avoidance and tax evasions are two very, very different things.
We don't want anybody on the show suffering from tax evasion. That would be a bad thing.
No, I mean, the
And
IRS
not very
code
biblical either.
Absolutely. The IRS code is written to teach us how to avoid tax, and the best we can educate ourselves through those things, the better. The fact that there are no free tax deductions, what does that mean? It means that there are tax deductions available to us, but sometimes they come at a cost, and it's
There's
just a
no
matter
free
of
lunch? Give me a break.
yeah. Well, no. You got to understand how that works in our favor, and again, take advantage of that. Disagreeing with the government is not a legitimate reason to not pay taxes. We all talk about the give unto Caesar what is Caesar's, understanding how to work within that framework and subscribe to that framework. Disagreeing is one thing. Working outside can be what's called illegal and refer to tax evasion, like you just mentioned, Mark.
Yeah, I mean, and so many, and we see this so often that Christians are objecting to how the government's being run, so they feel like they shouldn't send in their taxes, and that's not what the Bible says. And just because you disagree doesn't mean that you have the right to avoid that. But we'll talk a little bit more about that. But just a couple of things I wanted to add, Matt, is just some people think that paying taxes is a bad thing, and it's not. We don't believe that. You're paying income tax because you made some income. That's a good thing, right?
Absolutely.
Because some people, and we've seen that attitude go 180 degrees, where some folks don't want to work because they have to pay income tax. I mean, that just baffles me sometimes. But we do believe that paying taxes is not a bad thing. What we do want to make sure is that all our clients are working ahead of time, and we believe that this integrated tax planning is critical to your long-term financial success. And when you're talking about taxes, and Matt will tell you this, income taxes need to be planned out several years in advance. You need to learn to follow the tax code to a T to make sure that you're reducing your taxes, but you have to plan ahead. And it requires a high level of specialized expertise. So you don't really want to do it alone. Now, I'm guilty, have the guilty pleasure of enjoying reading the IRS tax code. Most people are not. Matt probably has to do it in his role as a tax preparer. But I think that's something that you really need to engage someone that understands the code and how to implement that into your own personal life or into your business. And then, Matt, one of the last things I was going to share here on this is we often run into folks, when we're meeting with clients, and they are so proud that they got a large refund check.
Hmm.
And folks, I can't tell you that I can't sugarcoat this any other way. Getting a large refund check is a sign of poor stewardship. Now, you may be offended by that, but that's, I don't care. You need to wake up and realize this, that you're basically the same folks that don't trust the government with their money are giving the government an interest-free loan. When you get a large refund check, you're giving the government an interest-free loan. They're not paying you interest on that. So you need to plan better to make sure that you're withholding, if you're working for someone, that you're withholding the correct amount from your paychecks and that you get a smaller refund, or you maybe have to owe just a couple of dollars at the end of the year when it's time to file taxes.
Yeah,
Um,
and I would throw out there, I mean, just kinda how you said it, understand the tax code and how it applies to you. You don't have to sit and read word for word, line for line, chapter by chapter what the IRS is trying to frame, but understand how you're taxed. Understand your sources of income. If you're a W-2 employee, if you're self-employed, if you have a business, what are you responsible for? What deductions are available to you? If you're a W-2 employee, understand how to set up your withholding, and that's all gonna be based on tax brackets. It's going to be based on credits. It's going to be based on all the pre-tax things that are coming out of your paycheck. But time after time, I see people. We prepare taxes. We see at the end of the tax planning situation where I'm getting a refund and they're pleased with the government. Yes, the government is great, or they're owing, and it's all the government's fault. Well, a lot of times it comes back to how did I plan my taxes throughout the year? Do
right.
I understand what's available to me and did I take advantage? Because there are small steps, small things that you can do throughout the year that are going to be a huge effect on when it is time to file your taxes. And for most people, they're shooting, oh, I want to get the biggest refund possible. But like you said, is that being a good steward? Can
It's
I
not.
spread
It's
that
not.
out? No.
No, it's not being a good steward. And let's talk about some of the biblical context there for taxes and stuff. But there's I think the culture, Matt, says that cheating by the other guy is pretty normal, so why shouldn't I?
Hmm.
And that paying taxes is largely a non-productive use of money, which we disagree with that. And we've mentioned before that a lot of people believe they shouldn't have to support an irresponsible government. No doubt, I agree with you that this is we have an irresponsible government, but that doesn't mean that we don't have to pay taxes. Luke 20:25. You mentioned this verse earlier, Matt, and where basically Jesus said, then give back to Caesar what is Caesar's and to God what is God's. Romans 13:7. Give to everyone what you owe them. If you owe taxes, pay taxes. If revenue, then revenue. If respect, then respect. If honor, then honor. So there's a number of scriptures throughout there, um, that we talked about. Our verse of the day, Matt, just to remind listeners, is Luke 16:10. Whoever can be trusted with very little can also be trusted with much. And so, really, how I pay my taxes is a direct reflection of my integrity.
Hmm.
And so, 2 Corinthians 4:2 is another verse that I reference, is basically, rather we have renounced secret and shameful ways. We do not use deception, nor do we distort the word of God. On the contrary, by setting forth in truth plainly, we commend ourselves to everyone's conscience in the sight of God. Folks, paying your taxes is a very important part of our walk as Christians, and we need to make sure that we're doing that. Now, that does not mean that we cannot use the tax code to its full extent. And this is why, from Matt is in our office, does a lot of tax preparation. If you need help, you can call us sometime during the week at 800-491-4508, 800-491-4508, and Matt will talk to you about what you might need to do and help you find a professional, or if it's something that he can't do, he'll do himself. But we want to make sure that we're honest and upfront about our taxes. Proverbs 13:11: dishonest money dwindles away, but whoever gathers money little by little makes it grow. It's okay. It is scriptural for us to pay our taxes, and it is also our right as Christians to use the tax code to its full extent. It's a very complicated beast, Matt. I mean,
Yep.
I'm sure you spend your Saturday afternoons reading the tax code, but it's complicated, and you really need to work with somebody that understands it. I for years I used to do my own taxes, um, but we'll look at that, and I now engage professionals. So we've got a question here. I've got you, Donna, on the line here on social media. We're going to take your question when we come back from the break. And so thank you for putting that. You can also, if others, if you're listening on Facebook, you can come in and put your questions in, and we'll be sure to answer them on the show. So when we come back, uh, Donna will answer your question. Matt will give us a market update, and we will go into our mailbag and other things and talk more about taxes. What a great way to start Saturday morning, Matt, by talking about taxes.
So
We're going to
excited.
try to make it fun, guys. So hang on. When we come back, you can give us a call here in the studio at 452-1120. We'll be right back. Well, good morning, everyone. Thanks for joining us on the Spend Life Well show. I'm your host, Mark Trice. I'm joined by my co-host and fellow financial professional, Matthew Boudreau. And we've got a caller on the line. Wayne, let us know your question here.
This is a qualified charitable distribution question.
Okay.
My wife turns 70. I'm already 72, but my wife turned 72 this year. And so we're going to start taking required minimum distributions.
Okay.
All of her 401k is with a former employer. That employer says that the only way to take that required minimum distribution is for them to give it to her. So our objective is to get that required minimum distribution transferred from her former employer to a brokerage account that has check writing capabilities so that she can write checks to the church and other Christian organizations.
Okay.
But they're saying we can't do that. They have to give it as a required minimum distribution.
Well, there's multiple parts to your question, Wayne. So I'm going to try to break them apart, and Matt, you jump in here and help me. But you've got a couple of different components. Let's talk about the required minimum distributions first, which the law changed a few years ago, and we no longer have to take out at 70 and a half for those required minimum distributions from our retirement accounts, but now at age 72. The challenge is a lot of people don't realize that when I have multiple IRA accounts or individual retirement arrangement accounts, Uncle Sam doesn't care which IRA account that I take that required minimum distribution from. I can take it from one, I can take it from five if I have 5 accounts, but we have to take the total amount. Workplace retirement plans like 401ks, they're treated differently. So it has its own separate required minimum distribution. Now, Wayne, your wife could, if she wanted to simplify things, you might want to talk to a professional. We can certainly help you in our office, but she could roll it to her own IRA, in which she would have a little bit more control over how that's distributed. One of the things about the 401k is that they're going to require her to withhold a minimum of 20% for income tax. That is written into the tax code. So you can do more, but they're going to make you withhold at least 20% for income taxes. And yet here you are, you're wanting to make a charitable contribution. So we'll talk about qualified charitable distributions here in just a second. So if you want to simplify things, you want to talk to a financial professional that can help you. It's not so much that you need checkbook privileges. You got to be careful about that, because one of the characteristics of the qualified charitable distribution is that you never touch the money. And Matt, you may want to chime in here on this because one of the beauty of doing that, and you can do that, Wayne, as early as age 70 and a half, the year that you turn 70 and a half, from your retirement accounts, mainly IRAs, you're making a gift directly to that nonprofit or church. And we have a lot of clients that we talk about this every year. You can make that gift directly from your IRA to the church. It never touches your hands, and therefore you will not owe income tax on that distribution. Now, you don't get to deduct the distribution. Is that right, Matt?
Right. And I mean, I think you explained this very well. I think the hardest part, the thing that we see most common, is make sure you're communicating with the custodian that has the funds, that it is not coming through your hands. It's going directly to where you want it to go. That's the way to really relieve it from putting it through your taxation.
What do you think about the checkbook writing privileges? I think that kind of muddies the water a little bit. I think you want to make sure that your custodian is distributing that directly for you, directly to the charity,
Yes.
Wayne. So you want to be careful about that. So you got two things going on here. I'm glad you've heard about the qualified charitable distribution. That's a great way to give. It actually increases your giving, because before, if you had took an IRA distribution from your IRA, you paid income taxes on it, and then you turned around and wrote a check. So if I'm in the 30% bracket and I withdrew $1,000 from my IRA, I'm going to give 300 to the government, and then 700 comes into my checking account, and then I turn around and write a check for $700. This way, Matt, if I'm correct, the full $1,000 goes to the church
Mhm.
automatically, and you don't owe a dime of income tax.
Right. And I would say, Mark, I'd add to that if you're wanting to include it as a deduction on your return, typically you need to, whoever's preparing your taxes, offer that, show that, because you're not going to be issued a form necessarily the same way you would be as income. So you've done it, it's in your record, but make sure to ask for that form so that you can include it with all of your other tax documents.
Matt, that's a great point. And the
So-
thing is that you'll get a 1099, but it's not going to be marked, Wayne, that says that your wife made a qualified charitable distribution. You have to tell your tax
Right.
preparer that this was a qualified charitable distribution. And
let me say what I have done. What I have done is I do have in my account, I've already turned 72. So what I did, I had, like you said, several IRA type accounts or tax deferred accounts. I added all of the required minimum distributions up. I kept a spreadsheet. I gave 100%. I did have check writing. So the check writing capabilities, I gave 100% to either a church or a 403
501(c)(3) charity.
charitable organization.
Yeah, good.
Yeah. So I kept a spreadsheet.
Wayne,
We lose him.
We lost you, Wayne. If you want to call back, we'll take you back on the line in just a moment. So what Wayne was saying is doing now, Matt, there is a limit to the amount of qualified charitable distributions you can make in 1 year. Is that correct? Is that $100,000 still, or I'm thinking of something else?
Well, it's around there. I think there's another piece of the formula, and I don't remember off the top of my head. It has to
Okay.
do with the percentage of
All right.
factoring into what you can
Well,
deduct.
Wayne, if you want to call us during the week, if you're still listening, write down this number. It's 800-491-4508. 800-491-4508. And I think, Daniel, do we have Wayne back? Wayne, you there? Okay.
am.
Well, all right, Wayne. Go ahead and finish up your conversation. You kept a spreadsheet of those things, and Matt was saying there's a formula that you have to be careful about that you don't go over. It's somewhere around $100,000 is the max. But you want to talk to your tax professional about that, or you can give us a call in the office. Did that help at all?
Yes.
All right, great. Well, thank you for calling the show. Appreciate it. It's a great question, and one that we want to make sure that our listeners know about. So, Wayne, you weren't a stage caller, but the check's in the mail, man. Thank you for calling. That's a great question when we're talking about taxes. So I think we've got a question off of Facebook, Matt, don't we?
Yeah. So Donna sending us a message in on Facebook. So please know that is an avenue for you to submit those questions to us. But Donna's question is that she inherited a traditional IRA back in 2017 from her mother. She passed in the fall of that year. She has been taking the RMDs, and says she recently heard that she has 5 years from the year of death to cash out the IRA. What would be the tax complications on this?
Okay, first of all, I think maybe Donna's getting a little bit of incorrect information. Is that right, Matt?
Yeah,
She has
well,
a choice.
Sure. So, I mean, I think the 5 years plays into a lot changed in 2017. And Mark, you were referring to that rule. If you want to, I don't know if you want.
It's called a Rule 72T.
Yes.
which says you have choices, and we think the smart choice it depends on your age, Donna. It depends on your age, and you can type back if you want to clarify a little bit, but we're not going to give your age out on the air. But it depends on your age, and if you inherited, let's say, from your mom, and prior to the end of 2019, then you have a choice. You can spread that out as an inherited IRA and take your required minimum distribution over your lifetime, or you can do what the IRS calls a Rule 72T and distribute it over 5 years. Now, Matt, if she's been making the RMDs, if someone comes in and 'cause this happens from time to time, we have maybe someone calls up and said, "Oh my gosh, I just heard I have to take an RMD from my mom's inherited IRA that I got from her, and we're in 4 years and 6 months. She died 4 years and 6 months ago." Well, okay, you're probably going to use Rule 72T in that situation, because you've got to get it out in the first 5 years, so you don't have any penalties. Because if you miss an RMD, if you miss a required minimum distribution, you've got to potentially pay a penalty on the amount that you were supposed to pull out. And Matt, I can't. It's pretty large, isn't it? The penalty.
The penalty is around 10%. It can be more than that. I know it can be 20% depending on your tax bracket situation.
Okay.
But I think, and I don't know if you're getting to this, Mark, but if you do take advantage of that Rule 72T, Donna, I think the only taxation you're having to worry about if you take advantage of that rule is that it's taxed as ordinary income.
Yeah.
Mark, would
So,
you say
but
that?
so if it's a large inherited IRA, that might be kind of a tax hit for that. Okay, yeah. So Donna just told us her age. I think that's you can cash it out. You can do it in the first 5 years. It might be more beneficial for your own retirement to spread it out over your entire lifetime, but your situation's unique to you. And so if you'd like to talk about that with us further, I think we probably can get some more details from you if you give us a call in our office next week at 800-491-4508. So lots of options there. Thanks for the great question, Donna. Matt, let's jump in. Let's give folks our market update for the week.
All right. So let's get into the market update. Lots of swirling around, lots of uncertainty, lots of people paying attention to some headlines, and that could be a good thing, and that can be a not so good thing. But obviously, there are things going on. Specifically, we're talking tension between Russia and the Ukraine. Inflation's a hot topic going on right now, which a lot of the stuff causes fears for investors. So I know in a few minutes we'll get into some of the things that are going on with the Fed officials leaning towards a rate hike, and we'll take a look at what's going on with the indices to see what's happening in the market. But let's start off with a couple of these indexes. Let's talk about the S&P 500. If you don't know, this is an index of the 500 largest companies in the U.S. And so this was down this last week, down negative 1.58% this week. And as we talk year to date, it's part of a negative, again, 8.76% return for the year.
Getting really close to correction territory there, Matt.
It's moving. We'll see what happens. There's little glimmers of hope here and there, but overall, we see the numbers moving. There were some big swings on Thursday where the index dropped over 2%, and then everything sold off again this Friday. So I know we ended the week that way. We'll see what Monday, or I guess not Monday, the beginning of this week begins. So we have a holiday coming up.
Market holiday on Monday. Yay, we get to take the day off.
Yeah, kind of.
Or I'll be in the office, but
so let's talk Nasdaq. Nasdaq is the tech-heavy index. Seen a lot of high volatility over the last few weeks. Down this last week, negative 1.76%, and we're talking over 13% negativity for the year.
And that's down quite a bit, Matt. Because the Nasdaq really started going down towards the end of November, and that's more like 16% since then. And so tech stocks are suffering right now.
And we'll see what happens as things move on. A lot of people look at those and expect them to move a little bit differently, but we'll see. And for those of you holding the small caps, pay attention to the Russell 2000 index. Had a challenging week as well. This past week, down 0.95%, and we're looking at negative over 10.33% for the year, Mark. Aggregated bond index. How are the bonds doing? How the market's doing with our bonds? Down 0.31% negativity for the week, over 3.79% down for year to date. Okay. Long-term treasury. A lot of people look to that and hope for safety with that. But it's down 0.71% this week, down over 7%, 7.37% for the year.
And this is a big deal because so many listeners out there, um, are in what they consider what they call a balanced portfolio.
Mm-hmm.
And it's the majority of the industry has told us that the only way to reduce risk is just simply to add more bonds. Well, guess what, folks? You're losing money at both ends year to date unless you're working with a professional like us that is managing your risk through active management and technical analysis. Well, Matt, was there anything else that was actually positive this week? How about some of the 11 sectors?
Yeah, so when we talk sectors and break it down that way, we had a few that returned a little bit of positive. Those sectors were consumer staples, financials, and energy. And
Okay, so some things were positive for the week. Energy has been very, very positive, I guess. I don't want to say very hot. That might imply that we should all go buy energy. But
no.
Energy has been the only sector this year that's really done fairly well relative to the rest of the market. In fact, I think isn't that the only sector that's actually made any returns this year?
Yeah, as far as all year, yeah, looking at energy, and I don't know if most positive is a proper term, but that's definitely what's doing the best right now.
All right. All right. Thank you, Matt, for that market update. Folks, we are in unprecedented times when it comes to volatility in the stock market and the bond market as well. When we come back, we're going to talk more about what the Fed is doing and how interest rate hikes are going to create a damper on your portfolio, but also to your ability to borrow if you need to borrow. When we come back, we'll talk a little bit more about taxes and things and take your calls at 452-1120. That's 452-1120. Give us a call. We'd love to answer your questions and have a discussion with you. We'll be right back in just a few minutes. You're on the Spend Life Well Show.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right. Good morning, everyone. You're listening to the Spend Life Well Show. I'm joined here by my fellow financial professional, Matt Boudreau. And the Spend Life Well Show is where we apply biblical wisdom to your financial life. So glad you've taken a moment to join us. You can call us in the studio at 452-1120, 452-1120, or send us a quick email on radio@spendlifewell.com. That's radio@spendlifewell.com. Matt, I noticed that we had some questions come into that radio@spendlifewell.com email address this week. Let's take one or two of those.
Yeah, so we have a question. Ricky from Georgetown wrote in. He said, my wife and I are in our 30s. We had a really good year in 2021. We're thinking about upgrading our vehicles. What are some good guidelines for how much we should spend on our cars, on our vehicles?
My car dealer friends are not going to like my answer, but it's a good question. That was Ricky, you said?
Yes.
All right, Ricky from Georgetown. Ricky, now is a kind of a challenging time to buy a vehicle, and I think what's real clear is that because the value of vehicles are so high, especially used cars. I don't know about you, Matt, but I did a little bit of Kelley Blue Book on my vehicles this year, and they're 2 years old, and they're valued retail at about $15,000 more than I actually bought them for 2 years ago.
Wow.
It's crazy. It's crazy.
That is crazy.
So last time I checked inflation data, used cars were up over 40% year over year, and that means they're expensive. But folks, this this will pass at some point. The production lines will catch up. They'll start producing more and more new cars and things. And I think if you need a vehicle now, Ricky, okay, you need a vehicle now. If you can wait, I might wait a little bit. Um, maybe one of my car dealer friends can call in and give us some advice here. But I think one thing is clear. What I see a lot of people doing, and this is a mistake, when you've got vehicle values that I think are a little bit too overinflated right now, and then you finance them for a long term. I kinda think we can get 84-month type financing out there. You're asking for trouble because you will most likely have that vehicle die before you're finished paying it off. And, I'm being a little bit, dramatic here, Matt, but, you
Maybe
have to
not.
be you have to be careful, you have to be careful. You do not want to be caught, held underwater where the value of your vehicle, because it will go down in value, I think, once inflation starts to cool off a little bit. I think they will go be down in value, and you're holding a lot of a bag of a mortgage, I mean, not a mortgage, interest payments and car payments that are you owe much more than the car's worth. And guess what? Let's hope it doesn't break down or you have a limit. You're going to be ended up paying a lot more for that car than the utility that you get out of that vehicle. Matt, have you seen anything? Have you seen anything? I haven't been buying a new car. You or I either have not bought a new car in a long time.
No, I mean, I would say just watch. I mean, the market is ebbing and flowing. Over the past 2 years, a lot has come up and a lot has come down. But I think, Mark, what you said is be aware. Be aware of what your values are. Kind of look online when you have time to see what's the car selling for. I like this model. I like this year. What's it going for? And as you pay attention, every couple weeks or whatever, you'll know if things are going up, things are going down. Pay attention to interest rates as loans are available, those kind of things. At some point, it'll ebb and flow into a place where it's good. But right now, I wouldn't say it's the best time.
Well, you have to be careful too, because we've noticed that some dealerships, and I don't know if it's still going on because I think they got so much pushback, but some dealerships have been charging a low inventory fee. It's the buyer's problem that you don't have much inventory. But in one case, one of our dear clients in the Austin area wanted to buy a new truck about 6 months ago, and the dealer, which I will not name, wanted to charge her a $10,000 low inventory fee on top of the MSRP sticker price.
So basically, they're just raising the MSRP.
Yeah, they're just raising the MSRP. Their claim was, well, we're not selling as many vehicles because we don't have them, and therefore we're going to charge you more. And I said, well, okay, well that's supply and demand, and just change the MSRP. Maybe they're not allowed to do that, but they're basically charging more money for that vehicle. Thankfully, because our clients are all smart and they listen to what we have to say, she said, "No way." I'm not for sure that's exactly what she said. She said, "No way, no how," and she waited for an opportunity. And she does not have a truck, but certainly not from that dealer who was going to gouge her. But she found that vehicle that she wanted, and she got a great car. And she sent me pictures, and I can't wait to go take a ride because it's cool. It's a nice looking truck. So good for her. I'm glad she didn't fall to that. But sometimes, we might be. A lot of us don't really know how to buy a vehicle, Matt, and
That's right.
you can fall into traps there. We ought to have a show sometime on buying vehicles. I'm going to get one of my dealer friends to come on and talk to us about that. So we'll do that in some show. Let's take one more question from the mailbag, and then we'll jump back into our discussion about taxes.
All right.
So we can maybe put everybody else back to sleep.
All right. So this is from Stephen from Temple.
All right.
Stephen says, I have several friends who like to brag about how much money they made in Tesla stock during 2021.
Yep.
Is that a good investment? And should I go buy some?
Well, we don't really give individual stock recommendations, but I got to tell you, Tesla, and I'm putting on my little cheaters here. Tesla since November, they may have made money last year, but Tesla since November is down about 29%. So talk to your friends again.
See how they're doing today.
See, that's funny because our golfing buddies always brag about how much money they made on a stock, and their hot stock tip, but they never tell you when they lost their shirt because of it, right? And so, be careful when you hear information. Sometimes the worst financial advisors are your friends or the person you sit behind in church because they give you advice about what happened to them. And then we instantly hear, oh gosh, Tesla was so great last year. I don't want to miss out on that. And we have the fear of missing out, right? FOMO, fear of missing out. And Tesla's own, decline here is caused in part by its dear founder. And Elon, if you're in the Austin area or Central Texas, checking some rocket engines and stuff, um, you know, be careful about what you tweet, my friend. Um, but maybe he wanted that to happen. So anyway, that's a great question. But be careful about that. You don't want to buy a stock based on what you feel is a hot stock tip. You want to make sure that your portfolio is well managed. And it's okay if you want to speculate in a stock, but you have to be concerned about the risk that you're facing there. And with any investment, you could lose all of your principal. In other words, everything you put into it could go to zero. It's possible. So I think that especially tech stocks like that one you mentioned there is subject to a lot of volatility. So be very careful with that. Good question there, Matt. Let's talk a little bit more about some of the types of taxes.
Yeah.
And because I think a lot of people they don't really understand all the different taxes that are out there, and we really are taxed.
In different ways, different places, different times. I think we started the show with talking about understanding your situation, understand what type of income that you have, because you need to understand how it's taxed. And so we're going to talk about a couple things right now that, I mean, you may understand all of it, you may not, but just understand that these are things to be aware of and figure out how it applies to you so that you can take advantage of the credits that are available to you. So income tax, obviously. Most of us have this, and it's going to be taxed at your rate. Once you get past the standard deduction, you fall into a tax bracket. And for the most part, you are taxed at a certain rate because it is income. And a lot of different things we were talking about, beneficiary IRAs, we were talking about take distributions. Those are all things that can be taxed as if it were income tax, and it's going to be at a specific rate.
And that's probably the most of us are going to, almost everybody's going to have to have some type of income tax, right?
Well, right. And most people, when they refer to paying taxes, that's what they were talking about. They were
Now,
talking about
actually,
paying
I've heard
taxes.
a stat the other day, Matt, that basically it said that about 51% of Americans don't pay any income tax.
Any.
Yeah, maybe that's a topic for another show.
Ooh.
So what other types of taxes do we, what might we face?
So sales tax,
Yep.
local.
Okay. Yep.
Counties have different. I mean, you hear about the things that you have the opportunity to vote on in your local city, in your county. Obviously, city to city, county to county, state to state. That's all going to differ depending on what kind of structure you have in place. And we're pretty much all faced with that as we buy things locally. And so that's a part of what's built into how we spend money and when we purchase things.
And other intangibles like gasoline tax.
Yep.
Yeah. So, every time you get a gallon of gas, you get some tax on that. That's both federal and I think there is a state in the state of Texas as well.
Yeah, there is. Yep. Yeah. So that'll all be built in differently. And a lot of times we don't have to stay on top of understanding it's built in. We're paying it, but
Correct.
it's there. Estate taxes. And the
Right.
federal has a standard that we have to face. And that is kind of
What's the
extended to.
exemption now? Is that like 12 million for a
Oh
couple?
gosh.
I think it's somewhere close to that. Clearly not a problem for me because
Well, that's what I'm
I
saying.
don't need to know that number.
A lot
And
of
for most
people
of us,
don't
it's
need
not.
to.
But yeah, that could be a problem later on for you.
Yeah.
And then we don't. We have gift taxes as well at the federal level. If we give, what's the max that I can gift someone without having any type of forms to file or anything at the federal level? Is it 15,000 this year, Matt?
Yes, it's 15,000.
Okay.
And again, pay attention to that. If you think you're reaching that threshold or want to reach that threshold, talk to your tax professional. Make sure you're doing
Yeah.
it properly because certain documentation has to be a part of that. You can't just say, "Yeah, I did this. I gave this to so and so."
Right. You
You
got to
need
file
to,
that and
yeah.
document that stuff.
Yep.
And also property tax. That's probably one of the biggest revenue generators for our schools.
Yep.
in the state of Texas, and then also something that comes out of our check every pay period is Social Security and other
Yes.
types of taxes there. So there's lots of different types of taxes, Matt, but the income tax is what's really unique, and we've got some flexibility with it. So there's different types of tax rates. Uh, what are those like three kinds of tax rates that we might face there?
I mean, the three we've got marginal,
Yeah.
we've got effective, and then we've got long-term capital gains. And a lot of times you don't need to dig in and understand each one of these because it's going to be processed a certain way once you know, have all your different sources of income, all the different forms that you require. But just know that there are categories, borderlines. Once you hit certain different thresholds, it changes kind of how you're taxed. And so you need to be aware, you know, talking about the long-term capital gain, different assets, different investments, understand the activity that you're, you know, making choices to buy and sell, because short-term capital gains are going to be taxed differently from long-term capital gains. Just be aware of some of the basics of what you have and how it affects you and what you're doing to either better or worsen your tax situation.
So tell us a little bit more about the marginal tax rate. That's where um, every dollar is taxed at a certain rate, right? Or the next taxable dollar is taxed at a
Yeah,
certain rate.
so you fall into a tax bracket up to a certain amount. You know, figure out how you file. Are you filing single? Are you filing head of household? Are you filing married jointly? There are different tax brackets that you fall into depending on how you're filing and then your income. And so, say you're at a 12% tax bracket, you make more money this year, that pushes you into possibly the 22% tax bracket. Well, up to that threshold of what that tax bracket holds you in, you're taxed at a 12% rate. Well, everything above that threshold, you're going to bump up to the next tax bracket, which is 22. Beyond 22, there's a smaller jump, so you go from 22% tax bracket to a 24% tax bracket, and so on. The more money you make, the more it pushes you into what that next marginal tax bracket
Okay.
would
Well,
be.
let's talk in the final minutes of the show. If you've got a call, you can call us at 452-1120. But you know, what are some of those tax planning strategies that we can kind of go into and think about?
So obviously, keep track of your income. Know what's coming. I mean, right now we're at the beginning of the first 2 months of the year. A lot of times people look forward into predicting what they made last year. That's how they're basing looking forward into making how much this year. But know an idea on how much you're going to make. Pay attention to your withholdings if you have that opportunity to you. And pay attention to your deductions. A lot of people, you know, at the end of the year, come up with this long list of things that they've spent a lot of time doing and trapping and totaling and documenting, and it makes no difference. So understand what deductions count, where your limits are, and spend your time, you know, accordingly. Um, Obviously, a little bit of medical bills aren't going to take you a long way, but if something unexpected comes and you spend a lot of money on medical bills, keep track of that. Know that's when to start documenting everything that you spent.
So doing that's going to really simplify your taxes. And I think the one thing that you've pointed out to me many times is you got to have a long-term perspective towards your taxes. The focus isn't about reducing taxes today. We have to look at it in a big picture. And we didn't talk about this too much, but realizing that all debt is paid with after-tax dollars, and we also remember that having taxes is a result of having income.
yeah,
So that's not a bad thing. You
no,
know, Luke 20:25, remember, it says, "Render unto Caesar what is Caesar's." So we want to make sure that we're paying our taxes, but not paying too much, and making sure that we're doing that the right way, the God way. So I want to point out just a little bit real fast. March 5th, our next webinar is our monthly market update. That's at 9:15, directly following the show. And then we also have continuing discussion of tax planning. We'll go in more depth in the new tax laws and some that are proposed. That's March 15th at 6 p.m. You can find all these events online at spendlifewell.com/events. And folks, we're so glad that you joined us. Matt, thanks for being a part of the show today. And I'm sure we'll have you on many times in the future to do that.
yeah,
But folks, God willing, we will be back next week. And just remember, you can reach us anytime at radio@spendlifewell.com or at our offices during the week at 800-491-4508. You've been listening to the Spend Life Well show. Have a great weekend and God bless.